All right. Good afternoon, everyone. Today is Friday, the 21st day of June, 2013. Um, let's see. Today is Triple Witching Friday. I don't know if Dwayne mentioned that, but it is, in fact, Triple Witching Friday. What that means is there's a lot of things that expire all at the same time today. You know, futures contracts expire, options contracts expire. A bunch of things expire. All right, let's get into the results first. Okay, in the live trading room today, we're a -7 on the Russell, we're a +10 on gold, we're a -7 on crude, and we're a +8 on soybeans. Those were the trades. That's how we ended up in the live trading room today. Let me bring up my spreadsheet, and you can see, all right, over here, we were +8 on soybeans, we were -7 on the Russell, we were -7 on crude, -7 on crude oil, and +10 on gold. Those were the trades. It took us 32 minutes and 4 trades to get to the equivalent of 2 ES points per contract. We had a total of 13 trades overall. 13 trades overall this morning. And so far in the month of June, we are plus $3,475 a contract. When I say per contract, what that means is in the live trading room, I only trade one unit, one contract at a time. Now, I had a conversation with a fellow yesterday, and it became clear to me that not necessarily everyone knows what the contract is. You know, what we're talking about when I say one contract. What that basically means is, I'm not going to go into the definition of the contract, but what I'll say is, I'm buying one unit. You know, when you, like if you buy and sell options, you're buying one unit. A contract is basically you're buying the right to buy or sell something at a future price that's predetermined. And it's the same thing as with options. Okay, but we are buying, you know, like with soybeans, for instance, we are buying the right to buy or sell, depending on what type of contract we buy, if we're long or short, what type of position we have on the contract. To buy or sell, 5,000 bushels of soybeans at a certain price per bushel in the future. Now, I don't hold anything overnight, so it doesn't really matter that these things, that we're buying these things. I'm not holding it long term. I'm not hedging crops or anything like that. If you're hedging crops, then that becomes more important. The expiration dates, the time to expiration date, all that sort of stuff becomes more important. But since we're only doing it, for speculation, intraday speculation, then that stuff isn't as important. Okay, I just wanted to cover that. There was one other thing that I wanted to cover that Dwayne had mentioned. Now, he was talking about the weekly trading zones. All right, it's Friday, so I suppose we can show you guys all the zones that we had this week. And let me just go to an hourly chart like he usually does, and I'll back it out some so you can see them. All right, now, Dwayne had mentioned options. Now that I'm on the options thing here, and I'm going in that direction. When the week starts, if the week starts up here, we'll say, okay, these are, let's see, 1, 2, 3, 4. These aren't even all the zones right here, but for argument's sake, let me see if I can get all the zones on there. 1, 2, 3, 4, 5, 6, 7. Those are all of the weekly trading zones. Okay. Now, for argument's sake, if the week started, if it were Monday and we were up here at the highest weekly trading zone, a trade that is proven to work out very well over the past couple of years, 2, 3 years, 4 years, is if we were up here at this level on Monday, the day that the weekly trading zones are published, you could do a couple of things. You could sell call options, or you could buy put options. The lower risk one is buying puts. Your risk is limited to what the cost of the puts is if you buy puts at this level. You could buy put options because there's a very good chance that the price is going to go from here down to here by the end of the week. All right, and that's not an insignificant move on the ES. It's 100 points from up here all the way down to there. That's very significant. And if it did do that, the way that the options are priced, it varies from moment to moment. But you'd have, likely have a gain of several 100% in your options if you were able to get in up here, if you knew enough, if we had told you, or if you knew enough that this is a place to buy puts or to sell calls, then you would be able to take a decent profit on the move down. Now, obviously, this doesn't happen 100% of the time, but it doesn't actually. You know what? It doesn't even happen all that often that we start out on the other, on the complete end of the weekly trading zones. But I did want to mention that Dwayne had brought up options for a minute. Now, some of you might want to know what the difference is between buying puts and selling calls. If you sell calls, the maximum profit you're going to make is the amount that you sell the calls for. That's the maximum profit you're going to make. Your hope is that if you sell calls, your hope is that the market is going to go down and the calls are going to expire worthless. That's what you're hoping. Okay? So you sell it for whatever price it is that you get for it, and if they expire worthless, then you pocket that money. The downside to that is unlimited, because if the market just said, right here we're at the top, and suppose it just had another run up for the length of the contract can be months long. Suppose you had another run up that the market was just bullish for months, you would be buried. The least risk is the least risk, but the least risk is if you buy the puts. Okay, once you buy the puts, you're buying the ability to. I don't really want to go into the details of the options, but you're buying the ability to sell something at a lower price later. Okay. But right here, if you were to buy the puts, your risk is totally defined. Your risk is limited to what you paid for the puts. If you buy the puts right here, you're thinking or wanting the market to do what it has done, to move all the way down like this, like it has done. That's what you're wanting. And in that, if it does start moving down, then the value of those puts is going to increase substantially. If it starts moving up, then the value of the puts will diminish, possibly to nothing. But it's not going to cost you anything. The puts will expire worthless, and you'll have lost whatever it cost you to buy the puts originally. You won't be open-ended on your risk. Okay? That's the difference. You really, to even be able to sell them, you got to have a big account anyway. There's limitations on who can actually sell calls and who can sell puts. You have to have, a pretty sizable account to do that. But actually buy puts and buy calls, it doesn't take much at all. A few $100 to start. Now, that was a little bit of a tangent there, but Dwayne had mentioned maybe I'll go over the option side, and that's it. And we have done this in the past. When we've seen on a Monday or even on a Tuesday, if we were at the extreme weekly trading zone, we've done that and we recommended it, and we've had, I've even gone as far as to say, depending where it is, I've gone as far as to say, just sell buy the puts, and at the end of the week, you'll just see where it is. But there have been times where it's been several 100% higher at the end of the week, even at the end of 2 weeks. Right now, what we're looking at is the end of the current week, the end of our week. Right now, we're getting down toward our lowest weekly trading zone. All right, do the zones carry over to next week? Is probably what you're wondering. They do. With the range that we've had this week, the range next week will probably be even bigger. So they do carry some weight in the following week, but the zones that are published on Monday will be more important. Okay. All right. Now let me get off of that and get back into going over everything that happened today. All right. There were some nice ES trades today. Now that I have the ES open, I'll flip back to the 4-tick range and I'll show you the trades that happened today on the ES. Okay, let's see, 9 o'clock came along. There was a nice short trade triggered right here, another one here, another one here, and another one here. All of these were working down to that 78 level that Dwayne had talked about. Now, as this was coming together here, I had put in this level right here, and I said this is possible bottoming action. We want to see price give a close down below that level, or it's going to be possible bottoming action. It did eventually give a close below the level, but it was really bottoming anyway. The reason I said that is because the green line got into the cycle right here before we had a lower swing. All right. Then everything changed directions. There was an opportunity to get long right in here, and another one right in here. This one went for a couple of points. This one only went a little over a point. Our stop would have been a break even. Came back up and gave another shorting opportunity right in here. Again, we had more bottoming possibility right here. Right? It went through it. And you can see we have a double bottom right here. This was the low of the day at the time. It went down to the low of the day, bounced off it just a little bit. And came down after that. All right. After that, there was an opportunity to short right in here. There was a little bit of divergence down there, an opportunity to short right in there, and another one right in there. I missed this one while it was happening, but I did show that one while it was happening. All right. Then as we got toward the end of the morning session, everything flattened out right in here. And it looks like it's trying to make a little bit of a run right now. But if you look left, I would look left and see where it's likely to run to. All right, 79, 82, maybe up in that area right there. 79 is a double top, and 82 would be the next level up above if you break through that. But we'll see. We'll see how it all plays out. But that was the ES today. Okay. Are the weekly trading zones calculated automatically, or do you manually place them? John, do you mean are they calculated automatically, for us to just distribute them, or are they calculated automatically and put on the chart automatically? Dwayne actually manually places, lines on the chart for his weekly trading zones. But there is, in here, there's the CFWTZ indicator. All this does is actually position the lines on the chart for you, so you don't have to go chart to chart and place 14 lines on each chart. You can just put the string of numbers in here. They're generated by math. John, they're generated by math, and Dwayne, for that matter. Dwayne does the math. Okay. All right, so I said watch for 82. All right, you got the up close right here, bullish divergence, blue cycle, up close above the trend line on this, so watch for 82 on this. Okay, actually the entry would have been back here. If I'd have drawn the trend line, in the live trading room, if I'd have drawn the trend line, you'd have seen this up close above the trend line for the entry. Okay. All right, now let's get back to the stuff that I came in here to do. 34.75. That's where we are on the month. $3,475. I don't think we're going to exceed last month's high, which is the monthly. That's the high to beat right now, $6,292.50. But again, this is one lot, one unit, one contract. $3,475. It took me 179 trades to get there, but I wanted to be at 300, average $300 per day. It looks like I'm averaging about $200 per day, which is not that shabby when you think about it. All right, let's jump on to the Russells right here. Why don't we do that? Okay, we took on the Russell. What do we take? Yeah, we took some trades on the Russell today, and we ended up minus 7 ticks. Okay. Let's see. Our first trade over here on the Russell was right here. This was a down close below the trend line. I don't have the actual trend line drawn in here, but this was a down close below the trend line. And I ended up taking my stop to break even after we had 4 ticks profit in the trade, so I got a break even on that. I missed this nice win over here. This long trade right here, that was a win. I missed that. It changed directions. We really didn't have any divergence over here to short at that point. Changed directions again and again, and there really wasn't anything to do in here at this point. Right over here was another shorting opportunity that It went about 8 or 9 ticks. I didn't take that. I missed that. I did take this one. It stopped me out. Okay. Stopped me out of there. And let's see, over here, there was a shorting opportunity right in here, and it dropped down nicely from there. This was bottoming in the same place that the ES was bottoming, and it shot through it just like the ES did, and then it recovered. Okay, just like the ES did. There was a long trade in here, just like on the ES. It was one trade on the long side. I took this one right here, and I ended up taking a break even on it after we got the close above the MA1. Changed directions again, and there was no trade on this one. We were waiting for this one to happen, and there ended up being no trade on this because the black line got up above the BBC. Okay. Sheesh. We were waiting for the same thing over here, and the same thing happened. I got into this trade right at the end of the morning session, and I ended up getting 1 tick profit on that. We had a bullish cross here looking for the long opportunity, but we just didn't get it. Then it sort of collapsed all the way down through that. There was a shorting opportunity right here that I would have gotten a break even on that I didn't highlight and I didn't see. And that was pretty much it for the Russell. Okay, we ended the Russell minus 7 ticks on the day. Let's see, crude oil. Let's do crude next. Okay, my Russell and my crude were in the wrong places. Let's see, on the crude oil now, we had a bunch of trades set up, but I didn't take very many crude trades today. Let's see, in here, we had a bearish cross, tested the BBC with a down close, bearish divergence with a red cycle, so this right here was a nice short trade on the crude. This whole first 20 minutes here, I didn't even realize it, but my chart was set on a 10,000 contract from last night, and that's why I didn't see this. I didn't take any of that. That would have been the 2 points right there if I'd have seen it. If I'd have seen it and taken it and gotten filled, that would have been the 2 points this morning in the first 8 minutes or so. As it was, I ended up missing it. In here was a short trade, would have been a break-even trade, stopped to break even after 4 ticks profit. In here was another short trade. I don't know, I have to look at that. Yeah, right here, the cycle was red, so the down close was right there at 777. It pulled back up to 83. That's right, I remember that. It pulled back 6 ticks, and then it dropped all the way down to 56 for a 21 tick move. There was no divergence down here through all this to take any trades. But right over here we finally had some divergence with a down close below it, and here we had more divergence with another down close. While this was happening, the Russell was given a trade too, if I remember right. Alright, we had more divergence with the down close over here, but by the time it happened, we had no divergence. Alright, and there was a lot of movement right here, sideways to down movement, but again, we didn't have the divergence. Alright, there was a shorting opportunity right in here that definitely would have stopped you out had you taken that. Long opportunity here that I did take, that I got to break even on. Short opportunity in here that I totally missed. Long opportunity in here that I missed. A long opportunity in here that I took and I got some profit on. A short opportunity in here that I took and I lost on. And that was pretty much it. There were more opportunities in here, but I ended up not taking any of them. I ended up minus 7 ticks on crude for the morning. Okay. Right in here there was a shorting opportunity. In here there was a shorting opportunity. Over here there was a shorting opportunity. Over here there was a buying opportunity. Right here you would have needed to close above the trend line, so that didn't happen. And then it got really choppy and sideways, and currently you need a close above the trend line. I'll draw the trend line for you. There it is. You need an up close above that trend line for a long trade on the crude. Okay. That is what happened on the crude today. Now let's do the gold. Okay. Gold had some opportunities today. We did our first gold trade was right in here. I think we had, I don't remember how many ticks profit. I think we had 7 ticks profit on the first gold trade. And the next one was right here. We took a short after it went 4 ticks in our favor. I should have gotten the 2 points there, but I didn't. I ended up moving my stop to break even. I got the 2 points over here A few minutes later, this is where I ended up. I think I ended up getting the 2 points in here. Yeah, gold. We ended up with 10 ticks profit on that one. We got another 3 ticks altogether over here. All right. It changed directions. There was a shorting opportunity in here. I think right here. No, we needed to close down below the trend line. We didn't have an opportunity in there. We had an opportunity here. The reason we didn't have an opportunity is because the black line got up above the BBC. BBC is the green line. Okay. We had a bullish cross, and I tested the BBC with an up close. And again, over here, more opportunity to go long on that little move up, that leg up right there. There was an opportunity to short over here, and again over here. 2 spots right here to short. Over here was a long, and over here was a short that I had taken. I got a break even on that one after it went 4 ticks in favor of my trade. There was another short in here that I missed. And then this was right after the end of the morning session. I had told everybody that I thought things were going to move after the morning session. Right in here we had some nice bullish divergence, tested the BBC with an up close, and look at the way that gold ran up right there. I wish I had seen that, but I did not. During the break, you can see in here there were more trading opportunities in here. As long as you have divergence down here, you can pretty much look up here and figure that price is going to be, most of the time, price is going to be on the right side of the BBC and pulling back to test the BBC. All right. Right now on gold, we have bearish divergence. This right here is bearish divergence. Okay, it's bearish because the cycle is red and headed down and oversold, and the green line is moving away from it. So what it's suggesting is this is a short term. It's going to be a short term pullback up, and then it'll move down. This is actually topping action right here. Right here. Okay, because we didn't put in a higher swing. After this bounce right here, it hasn't put in a higher swing before the green line got into the cycle. Now, granted, it's probably resetting right here, so you'll probably see it get up through that level because it needs to reset, because this big move up kind of buried the cycle portion over here. Okay, so that's what you would think. All right, it needs to get a close up above this level. Right here, there were some nice trades right in here, though. These right here were very nice trades. All right, and we need the close up above that level. We just got that. So what you'll probably see here is a move up to, you'll probably see a move up to this level up here at 95.2. All right, and then everything down here will have to reset. Okay, that's what I would look for. There's 94.9. Watch for 95.2. Okay. Let's see. A few minutes ago. Yeah, the crude is also showing topping action right now. Okay. Let's see. Where else did we trade today? We traded on soybeans today. Let me do those. Okay. Now, most of the morning the soybeans weren't tradable. Okay. There was this one right here that I missed. I tried to get into that, and I missed it. There was another one over here that would have given me a break even. I missed that. But then it got stuck in this little area right here for like a half an hour. So does that qualify as most of the morning? It was about a half an hour it was stuck in there. And then it dropped down. We didn't have an opportunity to trade it when it dropped down. And we drew this in here and said it's bottoming action right there. There's 95.2 on the gold, guys. So look for 95.2. There it is. And that crude oil, I said look for an up close above the trend line. The up close above the trend line was actually right here. This was an up close above the trend line. The crude oil's moving up too. Soybeans, yeah, we jumped into this soybean trade. It was pretty late in the day, and we made the equivalent of 2 points. It was 2 cents on this soybean trade right here. All right, the beans right now really don't have anything, and you see we rolled to the X contract on the beans. Okay. All right, that's pretty much it. We pointed out a few things on the NQ, but we didn't really trade it. Copper just had a nice trade right here. Frank, copper just had a nice trade. You see that? Right in there. The ES is moving up. What did I say to look for on the ES? I think guys said to look for 80.
I don't remember.
80 something.
Actually, I had my headphones off.
That's okay.
But
that's right. It was.
I'm gonna show. When you're finished, I'm gonna show. Well.
Okay. I'm just about done.
No. Go ahead. Finish. Do whatever you need to do.
Okay. And we had a guy, because we did an open house today. We had one of the fellas in the live trading room wanted to look at coffee. So here was what coffee did this morning. Okay, it had a move from right here all the way up here. It had a little bit of a pullback with another opportunity to enter right there. It dropped all the way down in here. It didn't really do much in here on the way down. Now we didn't have an opportunity until right there for the short trade, and then it got pretty sideways. All right. We also looked at 30-year bonds. I'm not going to look at those right now, but we looked at 30-year bonds. The euro had some pretty good moves this morning, and that's it. I think I'm going to wrap it up here. So,
speaking of open houses, there's a great life lesson there. I just want to share it with everybody. If you're ever going to invite a couple thousand people to an event that requires a password, you probably should give them the password. Otherwise, you'll end up with traffic will be backed up on the 405 for hours. So, oh man.
Yeah, that was kind of funny.
It seemed like such a great idea at 2 a.m., but again, it was 2 a.m., and that's why I forgot the password. So, sorry,
right.
guys. I apologize to anyone that. But then I rushed to try to rectify it as best I could.
I was wondering how we could, when I was typing the password in this morning after seeing a few of those emails already.
Just make it go away, right?
I was thinking, how can I do this? How can I make the password not count? But unfortunately,
you could change it to required.
Yeah, I could have changed it to required. It's true.
Because it says password required, and so some people, if you don't give them a password, they try to type in required. It's just natural, that you would do that, but it's not.
But then all the normal guys couldn't get in.
Right, exactly.
Yeah. Not that the person who thought that passwords should be required was abnormal.
But you meant the regular partners and the people that had been on the free trial and all of that.
Anyway, it all worked out. All right, so let me tell everybody.
I'm sorry.
I was just going to say, I was going to wrap it up and say, let me tell everybody, if you've not taken a free trial with us, go to www.cfrn.net/apply, sign up for the free trial. If you're on the free trial and you want to become a partner, send us an email at support@cfrn.net or give me a call at 949-423-6464. It's 949-423-6464. Okay? There. Go ahead, Dwayne.
I was just going to say that I had a just great conversation this morning with one of our partners, someone who has been an investment banker for many, many years. That was his life's career. And last night he was in the partners meeting, and we were talking about having that daily goal, as we always do, and having something that's definable, measurable, and doable. And he said that he had never really thought about it in that way. He just sort of felt driven to trade bell to bell. But that something about the way we said it last night, it actually, kind of sunk in. And so today he put it into practice, and he says, you have no idea how I feel right now. He said, I have such a sense of relief because I came in, I did my job. He goes, and now I'm free. I have complete freedom until the markets open on Monday morning. He goes, yeah, I'm going to sit here and look at some charts and do a little work and research and whatnot, but I'm done working for the day. He goes, I just feel, he goes, thank you so much. And that just made me, giddy like a schoolgirl. And that's probably not politically correct to say, but I said
school child.
School child, there we go. Giddy like a school child. All right.
All right. Let me shut the recording off. And
okay.